of it.
repair. Yeah, the importance of it and how you fix your own credit on like by yourself, without having to pay somebody to do it.
All right. I'm so excited to have this conversation with you tonight about credit and credit repair. So I'm going to introduce the amazing Dana Austin, who has been helping people with their finances for about 5 years now. And how does credit play in this whole finance game? Please share with us tonight.
Okay. So I'm just going to share a little of my story from when I was young, young and not like uneducated about money stuff. So I got my first job when I was 15, and all through high school, I just didn't really have any responsibilities. I was in a small town, so I just worked and then but when I was 18, I got a job at Target, and everybody said, "Oh, you have to build your credit." So I got a Target card because that's where I worked. It was like the most logical place. I think I had a $200 limit. And I think I also had a car loan that I co-signed with my parents because at that age, I just couldn't afford it. And, nobody taught me to pay cash for things. Like it was always just, if you're going to do something, you have to just go get a loan or, a credit card. So when I moved out to Arizona from Iowa, when I was 19, I probably had about $2,000 in student loans because I had done a year in community college. And I owed about $4,000 on my car, and my Target card was probably around $300. So I had gotten a raise on my credit limit, so why not use it, right? And I always paid my bills every month. So, this was like 1998, right? When a good job was $11, $12 an hour at 19. I mean, that was good. And our rent was only about $500 a month. So it didn't take long. I thought I was doing good. I started paying my bills and I paid off my car really quick and then my student loan. So when we went to go buy a house, we didn't really have a lot of debt. We had saved up a down payment and stuff. And the mortgage company had no problem giving us a mortgage because we had good credit, I mean, even though we were young, we didn't have a long history, but we had a good credit, score at the time. So about a year after we got into our house, we were normal adults, but we had 2 newer cars by then. We had a bunch of tools that we had put on Home Depot cards or something. We had probably a financed couch because I'm sure we went to, and I remember this sectional couch we had that was pricey, and it was from probably some store where they offered financing,
12 months same as cash.
Of course, right? So everybody's like, "Oh, you gotta build your credit," and so the way to build credit is they teach you to borrow money and pay it back from companies, so you're paying interest on it, banks, stores, whatever. So, we were just pretty normal living paycheck to paycheck. And all it took was a month of my husband's schedule not being normal. And I mean, he wasn't technically laid off, he just wasn't scheduled for anything. So he wasn't paid for almost a month. And so we were scrambling to pay our bills. And I mean, and we had just, it had always been our thing where we knew how important credit was. So we were doing everything in our power to avoid being late or getting a ding on our credit. And so, when you go to extremes with that, it comes down to do we eat or do we pay our bills? And so sometimes we would literally pay our bills and have $20 or $30 left to pay. And I mean, we're just young and we weren't going to ask to borrow money from other family or anything. So it was really just a part of it was pride, and part of it was just, we got ourselves in this mess, we're going to get ourselves out. So, we started playing the little shell game that you play where you pay one thing with one card. Or, I mean, we got to where we were buying groceries on our credit card because we didn't have enough money left over after we paid our bills to buy groceries and gas. So it was okay, so let's pay all the money out and then we'll use the card to buy groceries and gas.
Oh, wow.
And Yeah, I mean, you can imagine how it was so stressful, and I think I had like one late car payment in that time, and it wasn't even late. I mean, in my mind, it's late when it's after the first, but like, you have a grace period, and I didn't even, that wasn't, I mean, that wasn't it was, I don't know. So anyway, it got worse after that. So like, just, I mean, we spent years living like that because it's so hard to catch up when you get to that point where you're just like, you know, where do we do this? How do we get caught up? And I think there was even a time when our bank had started doing, like, if you had direct deposit, you could get an advance on your paycheck. So it was basically like the payday loan places or whatever, but it was just our bank. And so, and let me tell you, once you get in that cycle, it's really hard to get out of it because, I mean, I know they were charging us to do it, and every once in a while, it was so hard. So, I mean, I think we finally got caught up when we sold our house because we had been in our house long enough to have a whole bunch of equity, and it was right around the time the housing market had gone up so much. And so, we're sitting there, and we finally had like taken a class to figure out how to handle the money and how to pay things off. So we were starting to kind of get it, but we still didn't have any money. So it's like, how do you work this plan if you don't have any extra money and you can barely pay the bills as it is? So I mean, we had tried, we got a home equity loan at one point. So, and we paid our bills off with the home equity loan, and then we wound up with more debt because
Wow.
essentially when you move debt from one card to another, or get a home equity loan and pay off your debt with it, or pay off your car with it or something, you're not actually paying the debt off, you're just moving it around, right? I mean, it's still there. It hasn't changed, it's still there. And that's the thing, is like, none of those things teach you how to actually pay it off. So I mean, you're just moving it around and playing this game. So we just started budgeting better, and we sold our house. We paid everything off with the sale of that house,
Hallelujah.
right? Except that here's the catch, that's still just moving the money around because we went to buy another house, and the other house, the housing market had gone up. So it's really literally like the market we're in now, so people who are sitting in a house right now that food alarms going. So like people who are in a house right now where they've got a whole bunch of equity because the market's just gone crazy, and they're sitting there thinking, oh, we can move, or we could pay off our debt, or we could get, this home equity loan. Like, that's not a solid plan, because I mean, I've been there and done that. And I can tell you from experience, it's still not gone. Like, even though the stuff is technically paid off, if we would have been smart back then, we would have just gone and rented something and had the extra money in the bank, and then built up, and figured out properly how to manage our money, because, we got into this new house, and the payment was higher than what our old house was, because that's what happens when you buy a more expensive house, your payment goes up. And then we had 2 kids at the time, so our little ones, and we started having to pay daycare, so that was an issue. So it's like, here we are, we just got a bigger mortgage payment. Now we have 2 daycare bills for little ones, and that's just whatever. But so you have to change your behavior, because just moving the money around doesn't work. And I think in all of that, trying to pay things off, we did try one of those credit counseling places, and all they did was they took over paying our bills. They didn't teach us anything, for one thing, and they charged us every month. So like, we paid one payment to the company, And we had to promise not to take out any more credit cards. Like, so that was like a thing. And I don't know if they were checking our credit every month or something to make sure that we weren't, but we're just the type of people where it's like, oh, well, they said we can't, so we don't do it. But I mean, I don't know if people do that or not, but so
Good.
we had tried that whole credit counseling thing, and they were paying our bills off, but it wasn't getting paid off any faster than it would have normally. And so then eventually, I think that's where one of the home equity loan came in. I think we've got that and like paid all that off or something. I don't even really remember because that was a crazy time, but it's just, the banks and the credit card companies, they want you to stay in debt. They want you to keep making payments because that's where they make their money. And so they have zero interest in like getting you to stop, like pay everything off. So they're not going to help you. And, the other thing is the credit reporting companies were kind of created by, like for all of this. And so it's just like, they work together. Your credit score has nothing to do with how much money you have in the bank, right? I mean, like zero, because it's all based on how much money you borrow from banks and stores and how well you pay it back. So, it's pretty basic. So, so when I got divorced in 2013, I mean, we had just the whole time we were scrambling, like just doing everything we could to not ruin our credit, right? So my credit wasn't horrible, but at that point, it was like I got divorced and I have yet to talk to somebody who has gotten divorced and made it through without getting issues from their credit, just because everything's changing and it's so hard to keep up with getting everything paid on time, plus depending on who has the stuff in their names and whatever. So
how'd you fix it?
we just didn't. Can you hear me okay?
Yeah.
Here you go. I'm not sure. Anyway, so there was really not a lot of negative stuff on my credit before I got divorced, but then just right after so I was a single mom, I had not asked for child support. And then about a month later, my paycheck was cut by 10 hours a week. So I basically essentially lost a whole week's paycheck for every month. So there goes all that money out of my budget. And I had no extra income available. I was trying to take care of my 2 kids and I couldn't figure out how to get a part-time job to work around my day job and my kids. And there was just, I had like no available credit on any of the cards that I had. I had no way to get approved for more credit because I had to go buy a car when I was leaving because we didn't have 2 cars, we had 1. So I had just bought a car and that kind of like took up my available credit. And it wasn't an expensive car, it was just so cheap, but I was so broke. So I did the best I could. I put my priorities first because I had at least learned that part of like, you have to eat
Fixing your finances
and pay the rent and all that stuff. So, I finally got to a point where I was just like so sick of living in that, like that stress of making sure I wasn't late that I was just like, well, whatever. If it's my debts, my credit score's already affected, right? So it's just is what it is. And I'm doing the best I can, and I think at some point you kind of have to do that. So to break the cycle on all this stuff, the very first thing you have to do is decide that you're never going to use debt again.
Hallelujah.
Right? So you have to stop using credit, just period. And you have to draw a line in the sand and just go, you know what, we're not doing it. And then you start building like a temporary emergency fund. So you can't build a huge one because you don't have a lot of extra money, but you take what time you need to get at least $1,000 or something in your savings account so that if your battery's dead and you got to get to work or you're tired, whatever. And then you start just focusing on one card at a time, because once you start paying, and make sure you're paying your payments on time. One thing I did, because I was a single mom and I had a hard time just keeping track of life, I set up everything on bill pay, and I put it in my calendar for my calendar to notify me like a week before the bill was coming out of my account, so that I could make sure that I had everything in the right place. And if I needed to adjust my payments, then I had time to do that. And I had, because I couldn't keep track of life. So like making sure that your bills are paid on time is like the most important thing. And if you don't have enough money to pay the bill, call the company. Like sometimes they will work with you and change your payment dates. If you have to, they can move it back 2 weeks or something. I mean, not always, but I found that was one of the most helpful things, is just being able to call them and be like, well, I'm working on it and I get paid this day and I can pay you that day if you just call me back. And, and then a lot of times that'll help you not get too dinged on stuff. But, you just have to focus on one thing at a time, because trying to focus on all of them doesn't do you any good.
You still have to pay the minimums on all the rest of them.
The minimums, yeah. So, and then if you have stuff that's reported on there false, you can call them up and challenge that stuff. And if you have proof, I mean, like I have a client who has been, I was working with him before he was ever like my client. Like we would have these conversations that I would be like helping him with the whole, this is how you need to walk through that. And he actually had some child support stuff that was through the courts that was reporting on his credit, and they were reporting it wrong. They showed him for like months that he was late, and they were taking it out of his paycheck. So he's like, how am I late? There's no way I'm late, because you're taking it out of my paycheck. So they had like started it or something, and they started it off wrong. And he's worked it's taken him a lot of like calling and writing letters and trying to get them, but it's the court, so they don't have a whole lot of motivation or, they don't, it's just, well, it's child support. But for any other company, you can call them and settle stuff if it's old. A lot of times if it's in collections, you can pay it off, and it might not cost you your balance that you thought you owed. You can kind of deal with them sometimes.
Do you recommend getting every negotiation in writing and keeping that paperwork forever?
I can't hear you.
Uh-oh.
Oh, now I can. I'm not sure why, but I couldn't.
Sorry about that. I was asking if you recommended getting any negotiations in writing and keeping that documentation forever.
Yeah.
Still can't hear me?
I don't know what my sound.
Uh-oh.
Your sound.
I can hear you fine. Technical difficulties. Can you hear me now?
I can hear you. Yes.
You can?
Yes.
Yay! I was asking if you recommend keeping any documentation of negotiations
Absolutely.
in writing and
Yeah.
forever.
Yes, forever. Thankfully, we have email now, so they can easily email you anything in writing. And I actually know another person recently that was asking me about this stuff. And it was something really old. And I want to say it was like a couple $100. It wasn't even really a lot, but like, I was just like, yeah, they don't need to mail it to you. It just needs to be in writing somehow, so that you can come back later and prove that this was your agreement and that you paid it, and then keep a copy of where it came out of your account, your statements or something. Keep it forever, because that way you could prove. And the other thing is, like, if you have gotten evicted out of a home, or like if you left and didn't like finish up your lease or something, they can go back on you for that too. So, you have to call the leasing company or the management company or somebody and clear that up. because it'll stay there forever if you don't. And you owe the money because you probably left and, you know, didn't give them notice or something, or, you know, you left and broke your lease and didn't finish paying. I mean, things happen, you know, and I think they get it. And they're usually happy to get something rather than nothing. So if you can get some kind of a, you know, agreement to like get them to take it off your credit or fix it, then do whatever you have to do. I mean, a lot of times you have to wait until you have some money saved up in order to do that, because they don't, you know, they're not going to go, oh yeah, just pay us on payments because they've already figured out that you're not paying normal, but you know, but yeah, I mean, and there's different types of credit. So, you know, there's different things that are going to get reported on. So like car loans are different than credit cards, you know, because they're a fixed rate of credit versus a revolving credit like your credit cards. You know, mortgages are different, and I'm guessing do you know if they report like utilities and stuff now? I mean, I've heard that there's an agency that
I
like,
don't know. I know they check your credit when you sign up for utilities, but I don't know that they report on utilities.
yeah. So, I mean, I've heard that even car insurance places check credit now.
Oh yeah, everyone checks your credit. Your credit score is so important. We hear time and time again all these financial experts saying you don't need a credit score. You absolutely need a credit score, because if you don't have one, you're going to pay higher fees and higher deposits, and it's just not necessary. So have a credit score. It doesn't need to be like you have a bunch of debt, but have some credit.
Right. And you can have a credit. I mean, I have a credit score and all I have is my mortgage. So you don't have to have a whole bunch of different credit cards and loans and stuff. And that was one of the things that I wanted to talk about too, is like, so after we got married and paid off all of our debt, that was in June of like 2016. And then, you know, everybody says, well, you have to have credit to buy a house. You have to have credit to buy a house. Well, you know, the mortgage companies can, and they will look into like, you know, they'll do a deeper, like analysis of you if you don't have a credit score. It's having no credit score basically is better than having a bad credit score. So it's possible to still get a loan, you know. And I mean, so we started looking for a house in May. It was May of like 2017. So less than a year later, my car was the very last debt that we paid off. And I think for some reason, Adam had a card that was still like open, but it didn't have anything on it. So his credit score was kind of fine, you know, like he still had one and it was good. Like it had built up. Like, so from the divorce, I think my credit had gotten down to like maybe 550 or somewhere around, which is not very good. And, I mean, I don't remember for sure, but it like from paying all those debts off as quick as we did, and just, I mean, we were just consistent every month, and I made sure that everything was on time. And
you did that with debt stacking.
Yes, we did it with our debt stacking plan. But like, so within a year of paying the last one off, the credit reporting agencies, my score never dropped. Like I never got a notification that my score had dropped, because I use Credit Karma to like just track. And then also our identity theft protection plan always track, like I get notifications from that at the time. Your credit scores changed. It's usually like within a couple points, you know, nothing major, but yeah, my credit score never like really dropped or anything. It just was reporting to the mortgage company that you might want to look into this, because we don't have enough information to give you a score, because I didn't have any outstanding loans or anything in my name. So the bank kind of was like, well, you know, you might be dead is what it said. It's like, you might have been reported dead. So you might want to check this out and do some research, because it's really weird that you don't have any information here. And so like there was nothing in there negative. It was just that I didn't have any outstanding loans. And so they looked into my income to make sure they verified my income. And I had to do a little extra work with that just because of the nature of how I was paid, because they couldn't figure it out. So that made it a little bit crazy. Like it was just it was a really interesting time. And Adam wasn't working, so we qualified for this house with basically my non-credit score and my income. And it wasn't out of line, and we had a good down payment, but it wasn't extreme. I mean, we didn't put 20% down. We probably put 10,
So
and
wait a
so that
minute. You got out of debt and you
yeah,
saved money for a down payment? Did you
yeah,
have an emergency fund?
yes, yes, we had a number.
Amazing.
Yeah,
Amazing
so
what happens when you get out of debt.
it is, because when you free up all that money that you're paying out every month to your credit cards and your car payments. I remember my car payment was insane, because and that's like a story for another day. But anyway, I got into that car in a like yeah, no, I shouldn't have bought it in the first place, but I really was like backed into a corner on it, and I didn't have a choice because of trying to get my name off of the loan for the car that I had with my ex. So like that was kind of I had to get because when you get divorced, you've got to like get your names off of things together, because then they can have an effect on your credit if they stop paying.
Absolutely.
And I mean, I guess that's relevant to this because he basically didn't want the car anymore, couldn't afford the payments, and threatened to have it repossessed. And so in order to avoid that, I had to take that car and the car that I had bought and like trade them. And so I got this, this other car. So I like basically I paid off my car when I had only had it 2 years, and my payment was, I think, close to like $700 a month.
Wow.
And it made me just sick. And when I first started paying it, I was just like,
once you paid that off, you had an extra $700.
Oh, no. By the time we finished paying that off, I think we were paying like $2,200 a month on it, because
in the debt stacking
because the debt stacking, when you pile it, like when you apply that payment to the next one and then to the next one to the next one. So I think altogether, we were paying out about $2,200 every month to debt. And then so, we got done with the debt stacking, and we were able to put that $2,200 towards our emergency fund. So coming up with a 3 or 6 month emergency fund, it's like that, you don't have any debt. And then on top of that, then we started saving for the house. And, I mean, I'm going to admit that like, we were busting at the seams with our kids, and our girls were at each other's throats. So we probably bought our house a little sooner than we maybe should have. But I mean, we were much more prepared than a lot of people, that go by us, because I've done that too. So we were like, this is probably, I mean, like, and the whole point is like going through the debt stacking process. That's the change. That was what I needed to make the behavior change, because so many times I paid off the debt by moving it. It wasn't paid off, and my behavior didn't change. So every time the debt moved, it felt like it was gone. It felt like I had more breathing room, but I didn't focus on paying all the money out to pay that stuff off. So, all I was doing was creating a bigger and bigger mess. And so like when you actually take the time to pay it, like doing the debt stacking, and when you like focus on it and just have a plan, it actually changes your behavior. And so we've been debt free besides the house since 2016.
Wow.
And
would you say that it's like really smart for just like 20-year-olds to learn this stuff way before they start messing up everything, and just get right with finances, like right from the get-go? Like as soon as you turn 18, happy birthday, you're having a financial plan, and let's talk about how you pay cash for things.
I don't think it's even a matter of waiting till they're 18. I honestly think as soon as a kid gets their first job, you start teaching them how to save. I mean, my son has his first job. I set him up, he's got a savings account, he's got a checking account. He's kind of not doing the best, but he's a teenager, so like, this is the time when you're like, going, and we're on like month 2 of him having a job. So it's still new. He's still wasting all of his money on restaurants and, and having food delivered and like just the dumbest things, it's all food. And I'm telling him like, we buy food here, like you can eat for free.
There's
And,
ingredients in the refrigerator.
right. But I mean, they're kids, but I'm still teaching him. And, my daughter's 14 and she sat down and watched our financial house video. And I mean, she gets it. She's like watching this thing. She's like, oh my gosh, mom, that's crazy. Like just the stuff that the video talks about. And she's like, is that really true? Like can you really save that much money and have it grow to be that much? And like, that's how it works. And I said, yeah. And then she saw, cause I explained the rule of 72 and just how it, if you look at it in reverse in regards to credit, like if you use the rule of 72 and look back and go, okay, if this was your interest rates that you're paying, look how much money they're making off of you. And she was like, oh my gosh, I don't ever want to get it, and so like, she's all just gung-ho about this stuff. So, she gets it. And I hope that when she gets older, she'll still remember all that stuff and be, the same, but how they change.
Yeah.
They get that little taste of money. So, yeah, I mean,
We could talk about this all night.
Oh yeah, we could.
But I think that this video might be going really long. So I think you should wrap this up with the steps of what you would recommend for people to do before they create this big old financial mess. What are your recommendations?
I mean, I recommend, first of all, just learning about how money works in general and why we're not taught. I mean, there's a reason why we're not taught this stuff in school.
Oh, absolutely.
And I won't go into that, but there is a reason, and I can tell you that in private. But I mean,
we'll have that discussion.
And ultimately, you got to understand there's no overnight fix. If you have gotten yourself in a mess, it's going to take months to get it straightened out. And you can go to credit repair companies, but they're going to charge you to do the same thing you can do basically on your own. It might take you a little more of your own legwork, but they won't teach you about the money. They won't teach you anything. They'll just take your money and pay your bills for you. So, I just recommend learning as much as you can about just how personal finance works. Talk to someone like us, and because we're here to teach people this stuff. And I mean, my goal is to make people understand, like, I've been there. I wasn't a genius from day one with money. So like, I've made all the mistakes. So like, if there's somebody who's coming to me that has an issue, like they don't have to worry about being embarrassed or whatever, because I've probably, tried something, because I tried it all. And so, and every case is different. So you do need to talk to somebody about it, because we will customize our plans based on the situation. So we don't just give everybody the same plan.
No. How much do your plans cost? Because that seems to be a deterrent for most people. They think you're going to cost them a lot of money.
They don't cost anything. They are complimentary for our clients.
Wow. So, we're in everybody's budget. Everybody can afford us.
Everybody can afford us. Yes. So
I love it.
That's the best thing is that everybody can afford it. And that's one of the reasons why I came to this company, because I knew that, paying $100 an hour to talk to a financial coach is it's unreasonable for somebody who's trying to get out of the cycle of, I can't, what do I do first? Yeah. I mean, we'll tell you what to do first. We'll tell you what to do, like, as you move along. And, it's a phone call. Like, you just pick up the phone and call if you have a question, and we don't charge you to answer your question. So
hallelujah.
Yeah. So anyway, that's where we're at for tonight. So I just, I think I just could talk about it all day, because
truly, we love talking about finances and money and credit and all the things that have to do with money. And then we can just talk about it all night long, but we don't want to not have something to talk about next week.
Okay, let's talk about more credit stuff. So, so definitely leave us a comment and let us know that you watched. And if you have any questions, or if you've had experiences yourself, everything in this group is private, so nobody's going to see your stuff if you don't want it published like publicly.
Only
You
the
know, and I
people
think
in the group.
right, only the people in the group, and I think I'm going to turn on like anonymous posting so people can
Oh,
post
cool.
anonymously, so they don't have to have their name. You know, if they want to ask a question, because you know, and money is a touchy subject. So,
Yes, it's very
but
sensitive.
yeah, and then I think maybe next time we can just talk a little bit about like, you know, businesses and what we do for businesses, because
Oh, that'll
we
be
do
fun.
so
Let's do
much
that.
and there's just a lot of, so much to talk about. So anyway,
So much. It's an endless conversation of all the things that we do.
yeah, so, but let us know if we helped you in some way, because we definitely want to get some feedback. And, but yeah, we'll sign off for tonight. It was good to talk to you again.
Yes, always a pleasure. Thank you.